and welcome to today's episode of the Trade Finance Distribution Initiative podcast. I'm your host, Doris Kononowicz. Now, as we look forward to the Trade Finance Investor Day 2024, we're thrilled to have another distinguished guest with us who will be delivering the keynote on the crucial topic for all investors in trade finance space. Now, joining us today is Nick Stainthorpe. He's a global partner at the law firm Reed Smith, specializing in trade finance, structured finance, and securitization. Now, Nick will be shedding light on some of the risk mitigation strategies for investors in securities backed by trade finance. And I think this is a topic that is increasingly important in today's market landscape. Nick, welcome to the podcast.
Thank you very much, Doris. It's a pleasure to be here.
Thank you. Now, Reed Smith is a global household name as a law firm, and coming to the Trade Finance Investor Day, we're really excited to have you deliver the keynote, the legal keynote here. So I think we'd really want to start by having a high-level overview of some of the risks associated with investing in securities backed by trade finance. Now, why is risk mitigation such a critical topic for investors today?
Yeah, that's a great question, and I think this has to be broken down into different layers because we're talking about securities first of all, and these are securities like other securities. But beneath those securities, we have trade finance, and there are different touch points. So starting with securities first of all, investors in securities are obviously familiar with the general risks around investing in that particular asset class. Now, these securities are generally quite illiquid, which is fine. They're often short-dated, not always, so at least an investor can expect to get their money back reasonably soon from the underlying assets. And then we need to dive one level deeper to talk about how we protect investors from risks in these assets. So first of all, generally speaking, these are asset-backed securities with a special purpose company that acquires exposures to trade finance assets. So here, the great thing is it should be bankruptcy remote. The somewhat more complicated thing is, it's going to be managed by a third-party servicer, usually often the bank that's originated the underlying trade finance assets. So we need to make sure that the servicer is credible and they're subject to the right kind of obligation. So that's a kind of classic securitization. That's kind of a classic securitization analysis, and something which, of the many platforms and structures we see in the market, I think is very well catered for. And then we need to go one level deeper still, and that's to the underlying trade finance assets themselves. The investor is ultimately exposed to them through the structure, and without being too trite on the subject, we need to make sure that good assets go in, as there is nothing that we can do through the securities or the servicing or anything else that's going to make them more safe than they are. So at that point, an investor needs to ensure that they're working with a credible partner that's originating and servicing the assets in a professional way. Obviously, they need to do their credit risk analysis on the assets themselves to ensure they're happy with their risk profile. And then we need to mitigate some of the risks that, although not unique to trade finance, are definitely a feature of trade finance. So, for example, ensuring that they're properly protected against fraud, that the underlying assets are properly monitored to protect against that risk. Where there's insurance, which there often is in the transactions we work on, that the insurance policies are fit for purpose and will actually pay out ultimately to the investor when a claim is made. So, in short, we work on scores of these trade finance type distribution deals, and you need to take a multi-layered view on how they operate to mitigate the risks. This is, I think, a good asset class which lives up to its promise. But investors need to go into it with their eyes open and in a proper and methodical way.
That's a really good way to look at it, because when we're thinking about the legal frameworks that have been designed to protect investors here, we're kind of wondering, if there's risk management for investors that are that have been fine-tuned for what they need? For example, are there legal frameworks or jurisdictions that provide stronger protection for investors through the legal frameworks that are and landscape that is today?
Yeah, I think so. I mean, I think some players in this market have spent more time and thought on developing this. Now, clearly, for example, legal mitigation cannot really protect you against credit risk unless you've got someone else to step in and pay where an underlying debtor doesn't pay. But I think legal protections can mitigate risks of ensuring that you have proper enforceable claims against the servicers, for example, that they sign up to an appropriate scope for their duties, and that risk is allocated between the servicer, the originator, and the investor in an appropriate way. So, I mean, I suppose the good news for lawyers is that this is quite an intensively legal product. It often involves cross-border transactions, which always raise legal challenges that you don't find in the purely domestic sphere. But each piece of the puzzle has been, well honed, and there is definitely you can definitely, and many originators do, deliver robust investment products which achieve what they set out to do.
And are there some best practices that investors could follow in terms of due diligence when assessing trade finance-backed securities?
Yeah, I think one of the key things with due diligence is, on one side, you need to know the questions you're always going to ask. You can't just expect an originator to tell you, their usual spiel, and for that to be satisfactory. So you need some kind of, key checklist, key points that you want to be satisfied on for every transaction that you do. But there are two points that challenge that. The first one is every transaction is different, and just because you've managed to tick through a checklist doesn't mean you've necessarily understood the risk. So it really does require some thought. And a second very important point is, while the vast majority of the people we deal with are honest and direct, and give a full picture of the underlying investments, occasionally that's not the case, either by mistake or by design. So really you want third-party verification where possible. So, for example, third-party audits of underlying trade transactions, or where there is publicly available information on the companies involved, or where it's possible to have some direct interaction with the underlying parties. All of that can provide an extra layer of confidence which you don't necessarily get if you rely purely on the due diligence package that's provided to you without going that much deeper.
And I'm hoping that some of the investors who will be there on the day, and all the parties who will be there at the Trade Finance Investor Day, will be able to kind of learn from this, from your legal keynote on the day. Let's talk about the collaboration now, because, the Trade Finance Investor Day is going to have quite a few persons there, from financial institutions to legal advisors and whatnot. When it comes to collaboration, why is it important for all these different parties to be talking to each other when it comes to risk management and trade finance? And what would the role of Reed Smith be in facilitating all of this?
Yeah, that's a great question. I mean, look, we all benefit from this product and this market being a success. The more this market grows, the more work there is for all the bankers and lawyers and originators, the more funding there is available for those who need it. And this market's not going to grow if the product's not robust and not well understood. So all of us, all of the participants in the market, including the advisors like us, benefit from encouraging best practices through these kind of forums, and B, through speaking to each other and learning from each other's experiences, so we can deliver better outcomes for the parties. So, I'm for one, I'm very enthusiastic about this kind of thing.
I can imagine. And I think we're very excited to sort of see the reactions and, kind of see what everyone gets to learn from you on the day. Now, we're excited to see you on stage on the day. And as we're getting ready for all of this, I'd like to know what key takeaways, you want to impart to your attendees on your keynote, and why it was important for Reed Smith to be partnering with the TFDI at this event.
Yeah, sure. I mean, I've had the pleasure of attending TFDI in the past, and I was really impressed both by the quality of the people that attend in terms of this is an event which touches exactly on the sector of the market that we're active in. So alternative investors investing in trade finance. So it brings together some of the best originators and arrangers in the market with some of the most important investors. So that's one of that's the reason why we're so enthusiastic about this and so glad to be a part of it. In terms of what we want to give, the thoughts that we'd like to leave with people, I think that's all around best practice. How this can be done in a way which mitigates risk to the greatest extent possible, but is also efficient. And allows investors and originators to execute transactions efficiently, because the better this market works, the better for all of us. So that's really what I'd like to try and get across.
Well, we're looking forward to it. So thank you very much, Nick. Really insightful perspective, and I think it's really clear that having good legal strategies are fundamental for any investor looking to navigate this evolving landscape. So thanks for joining us, and we're actually really looking forward to seeing you at the event, Nick.
I'm looking forward to it too. Thank you so much, Doris. That was great.
All right, that wraps up today's episode for the TFDI podcast. For our listeners, please don't miss the opportunity to hear more from Nick at the Trade Finance Investor Day 2024, where he'll be diving even deeper into this topic. Stay tuned for more insights and discussions as we continue to bring you the latest from the world of trade finance. I'm Doris Kononowicz. Until next time, take care and keep exploring the opportunities in trade finance.